The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host. Once more, we go into the breach, dear friends.
The following takes place between 2 p.m. and 3 p.m.
every trading day. So what do we have going on in the market today? Of course, we have a little bit of financial kamikaze business going on from the Japanese. That's what I forgot today. I was going to get that little, I forget who sang it, but it was, I think I'm turning Japanese. Maybe the engineer can find it and play it as we come out of the next break. I think I'm turning Japanese. I really think so. Anyway, of course, they've been doing the same thing for 20 years. And I guess they never checked in with old Mr. Einstein. Some people say he was a little smarter than most. He said insanity is I'm told it's the vapors. He said that doing the same thing over again, getting the same results is and expecting different results is the definition of insanity. And I guess they just said, hey, we're going to go all in. Whatever we've done, probably wrong, but there's always Harry Carey at the end. We can always take the honorable way out when this doesn't work yet again. But very, very interesting. He's looking for it. He found it, the vapors. But anyway, yeah, just paying unpayable debts as we get back out there. So what are we doing? Well, as we said, I thought we were going to bounce back up to 1950, maybe 1975, maybe 1980. We've got through Wednesday because we've got fun buying. We also have every moron in the world who is short. We talked about it the last 3 days. The last thing you want to do is be short when everybody else is short. The worst position to be in. The shorts are always the weakest hand in any gunfight. They've got a 22 and everybody else has got 45s. It's easy to run them out when everybody's on the wrong side of the market. And it seems like, I probably put millions into the stock market being on the wrong side. So it's not like I was never wrong. I just decided not to be wrong any longer. And that was, about 2005. I decided to give that up and started to learn from my past mistakes and just lose a lot. An easy way to start learning. And, since then, I've made a lot. But what we have to know about is that just because it's a bear market, you're not short all the time. You're going to get these huge retracements in the market. We had these huge retracements when the stocks were literally worth nothing with the dot-com bust. And we've got them today. So there's very little new under the sun because history keeps repeating.
That it's all just a little bit of history repeating.
It is, and on this day in 1964, one of my favorite movies of all time, Stanley Kubrick's black comedy masterpiece, Dr. Strangelove, or How I Learned to Stop Worrying and Love the Bomb. Oh, I love that precious bodily fluids, and there's no fighting in the war room. Boy, they don't make movies like that anymore, and it's pretty hysterical. There's a great making of Dr. Strangelove. I probably liked it even more later on because, of course, growing up on an air base where there were many people involved in the nuclear deterrent force, including my father, from time to time. And, I think you have to think that what's going on, it's easy. Let me put it this way. It's easy to get into a bunker mentality And that's what the movie really wanted to show off, was that if you just all sit there and talk to each other, you can literally talk yourself into just about anything, maybe even socialism. If you talk, get it in a small enough ring of people together, you can ignore 6,000 years of recorded history and start talking about how great socialism is. But I digress. Anyway, great movie. And of course, nothing better than Mr. Sterling with his precious bodily fluids. The women want my essence. And of course, who can say anything more about Peter Sellers than the three different people that he plays in that movie? The whole thing, just as it says, a masterpiece of great filmmaking and fun and send up. And sometimes you need something like that to really show people the opposite side of whatever they're on. It's too easy to get that bunker mentality. And what else can you say about that? I still enjoy watching it from time to time. Try to watch it about once a year. I always see new things in it. But the mine shaft gap at the end has got to be probably the best of all of them. Anyway, as we go on to bigger things, we'll talk in the bottom half of the hour some of the Tech Insider stuff. We will have an abbreviated Tech Insider in the 3 o'clock hour with Tom O'Brien, so catch me at the bottom of the hour for that. But there was so much stuff that I figured I'll just push a lot of that stuff into the last tail end of this show, and then we'll catch the rest of it in the tail end of Tom's show in the 3 o'clock hour. But a lot of stuff is in there. Yes, you can't fight in here. This is the war room. Probably one of the most classic ones out here. But that's it. What else do we have? The market's moving fairly nice. If you are a bear, you're getting kind of what you want. I will say that in the part of, people are sending me a request. Why is my friend's friend? I will accept my request. I've added her on Skype. Oh, I don't think this is the same Megan. I probably shouldn't have said that. Oh, I got to get rid of her now. The Skype thing can be, I thought it was my friend's daughter. How do you get rid of it? Mark is unread. Block this person. I got to block them now. Report abuse. Block. Okay. Anyway, what I was going to say is that, we're up 30 points in the S&P cash. I'm looking for another 25 to 50 points higher. We've got 3 more days of fun buying, but what we don't have is probably going to be that big volume we need to turn this thing back up. Today is going to be short covering. We're going into the weekend. Probably the next 4 or 5 days could be just a stumble up. We've got 2.8 billion shares today as we in the first segment in the show. But you know what? I just don't think it's enough. Too many of these stocks had too much volume on the way down. I think we're getting, and I mean literally the stocks did. I think we're getting a lot of volume in the indexes today. My guess is we will not have a great deal of that in the actual stocks. But we'll talk about that on Monday.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And if you missed the first part of the show, I'll be in the bottom of the hour in the next hour with Tom O'Brien. And I had a question to talk about Amazon, but that's one of the things I'm going to talk with him about. In fact, it's kind of a continuation of a conversation that we had probably back in November last year. So it's going to be a continuing thing. So we'll talk about it then. In the meantime, as we said, volume is pretty good in the indexes, volume pretty light in the stocks so far. We'll get into the short interest. I had an email, and I put it in my newsletter this morning. I think I even said it yesterday. We had the highest short interest since 2010 for the last almost 6 years. If that's got to tell you anything, it's got to tell you when everybody's on the wrong side of the boat. And that was probably about everything you needed to know. It was kind of interesting. We'll talk more about Amazon, but it was very interesting to see that everybody was going short Amazon on Tuesday. They got squeezed out on Wednesday and Thursday, only to get hammered. Well, actually, was that Monday and Tuesday? Yeah, to get squeezed out Wednesday to get hammered on Thursday. So it's one of these things where you always have to say, you just have to watch out about being short in a market where everybody has turned bearish. I always love the quote out of Reminiscence of a Stock Operator, probably the best short seller of all time. If he wouldn't have been manic depressive, he would have owned the world. But Jesse Livermore said, it's time to cover all your shorts when you get severe demoralization in the market. And he didn't really qualify it, but I kind of know what he says now after a number of years when everybody gets all glum and doom that you're going to probably have a rip-your-face-off rally. I don't know if he'd actually qualify today's as one, but it's pretty close. You certainly... if you had any kind of decent risk reward, would have stopped out today, I suspect, if you'd been short in the days before. especially if you, like most people, were looking at that 1870 level and shorting the living daylights out of it. In fact, yeah, it's probably a good idea. Hang on. Projects. Test is a stock database. There it is. I've got to do the music so there's no dead air. Anyway, if we go back and just look at Amazon's short volume, I just wanted to go back in here. Of course, today's the 29th. Yesterday, of course, not a lot of shorting, but everybody was kind of shorting into that and getting squeezed out. In fact, the 26 had a short, had 24% of every shares of all the shares were short on that day, only to get squeezed out before the full thing, of course, falls apart. It's not too uncommon to see all that, but now I have a nice percentage short. Of course, the big people that are shorting the most right now, Netflix, Starbucks, you got to watch those stocks for more short squeezes in the future. For the ones that you don't want to probably think that are going to squeeze that much, the least shorted stocks out of the NASDAQ 100 has been basically pretty much the last few days. Western Digital, Fox, Symantec, a lot of these stocks that have already been blown up forever. Clack, about 4% short on a day, when kind of the average for most stocks is about 10% every day. Somebody's shorted, about 10% of in just about any stock. So you see these, it tends to be pretty low. In the meantime, let's get back to some of these stocks that are moving. As I said, Western Digital, this has been one that we've been kind of perpetually on and off short since the highs back in February in the Tech Insider. There was a fundamental reasons and a pretty decent technical reason to be short Western Digital. Of course, everybody was going to SSDs and basically solid state drives away from the spinning drives. They're 10 times faster. They're going to last 10 times longer now. The first versions would wear out fairly quickly. Today, average use at somebody's home, they're probably going to last somewhere between 5 and 10 years. And of course, use a tenth of the power and be 10 times faster. So pretty good. But as you can see, this thing came down on wicked bad volume. You're going to get a bounce out of here. Maybe this thing gets to 65. I just don't see how Western Digital claws its way back out. The only people that are going to make money on SSDs, I fear, are the manufacturers of the memory. And especially now that the memory is changing and Rambus, you got to kind of think that Rambus over the next couple of years is going to bite the big one. You kind of probably have to think Seagate and Western Digital will. I've seen 2 and 3 terabyte hard drives now with SSDs, and it just doesn't make any sense, I think, for these spinning drive companies. In fact, I wrote about it in the Tech Insider quite a bit, but probably there's no better sector in technology that has been documented more than hard drive manufacturers because of the magazines carrying sales figures and numbers and the companies that went in and out of business. There's probably 100 dead hard drive companies over the years from the mid-'70s till now. All kinds. Every time it seemed like there was a change, these companies were one of the most resistant to change, and they'd all go belly up. But you're going to get a bounce out of some of these. Are they still going to sell drives to the cloud people? Yes. Are they going to be on low margins? The answer is probably going to be continuously yes. Maxtor, Micropolis. Oh, boy. I'm trying to remember. One of the first places I worked at had a 10-inch open drive that looked like a record platter that you plopped in, and I think it held 10 megabytes, if I'm not mistaken. The heads would drop on them all the time, and the owner would have to buy another $200 disc. It was hysterical. Anyway, just thought that's interesting. Yeah, I mean, at some point, any dead cat will bounce from thrown from a high enough level, but everybody's just going to want to get out of this pig. Maybe this thing gets back up to 55 or 60 bucks. Maybe you can get in a trading range in it, but for me, I think a lot of the stocks that haven't broken yet as badly as this are going to be the ones that come back. We had a nice little earnings note out from Visa. It's got a little bit of love, but not a lot of volume. Again, like I said, this is not a market where you're getting a lot of up volume in individual stocks, which is fairly bad. Could this get back up and do, well, let's say, let's just take a look at it. You get $75, which would be a 50% retracement. Yeah, $76. Yeah, you could get that in the next 4 or 5 days. Remember, fund buying through Wednesday next week, so it's going to be tough to be on the wrong side of this for a few more days. And of course, as we said yesterday, the Wall Street's motto is never give a sucker an even break. And guess what? If you're buying stocks, you're buying in 401ks, you're buying in funds, and they all buy in the last few days of the month or the first couple of 2 or 3 days. And you will be known as suckers. Anyway, we'll be back in a minute. Look at a few more of these stocks. 1928 on the S&P cash, up 35 points. I can hear the squealing. The shorts are getting a squeeze. And there's no grease on this pig. They got a good hold on. We'll be back in a minute.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
You gotta love those negative interest rates. In fact, everybody loves it on the floor. I got this just here at the bottom of the hour. We got a microphone down to the New York Stock Exchange, and we got this one. A little quote here from somebody on the floor.
Let's put some lipstick on this pig.
And yes, they are. They're going to put some lipstick on this pig going into the weekend. And I don't know what else you can say about it other than that. Visa, of course, we were talking, that had a nice little bounce. Skyworks Solution, a little bit of a move still off of Apple. But again, not going to be the kind of volume to get you out and above it. Just too many people short. This is doing a little bit an ABC up. And of course, if you go back and look at the last move, you can kind of look and see where these things are starting to come in. You got the 382 out of it today. I'm thinking that there's a lot of shorts in this particular one, and you might get the 50 or the 618 retracement on it. In fact, I would probably wait for that. This thing had a nice big down day on the 5th with 6 million shares, and you'd like it to get into that with no volume. See all the people blink that are short, and then that would be the time probably to take a look at it. There's a brand new edition of the Tech Insider that came out here just about a minute ago. You can smell the freshness. We'll be getting ready to put new positions on, I suspect, maybe even starting next week for some long-term positions. What else do we have down here? I'm just checking everything else. Well, let's look at a few of these other stocks here. Of course, everybody talking about this new mosquito disease and how it's affecting the airlines and some others. Kind of a muted bounce out here in Royal Caribbean today. And again, not a lot of volume. You had about the same volume on the previous lows. A lot of people are starting to really get kind of bearish about what the next couple of months brings for this and whether or not they're going to have to start taking some of these locations out of the rotation for the cruise because, of course, of that, whatever it is, yet another new disease. And it's not chicken pox, it's something. It's always something, which was the name of my boat on the Cincinnati River, by the way. It's always something, and I had a little Sea-Doo behind it. It was called a little something. So that's how it did. QLogic, earnings out last night. Nice little pop on this one. It's back up to the resistance level again. Don't have the juice. It kind of came back off of it. You're going into the October 23rd high, 4.4 million shares. He had 2 million shares, and not a big surprise. This thing went up there, kind of ran it up the flagpole, and nobody saluted, and it's coming back down. But better than bad earnings. Microsoft, which I don't know if we're going to be talking about in the next hour, so I may cover this a little bit more. I'm going to talk about it broadly, but Microsoft, the good news, it just keeps coming. They continue to do all the right things and all the right moves. If the market comes down, we saw this thing kind of come back with the market down to 49.10. Nice pop, good earnings. They continue to do every single thing right. And Apple seems to, if it can find a crack to step on and break their mother's back, it tends to or tries to. But between Amazon and some of the others, Microsoft continues to get pretty much everything right. But they're giving away Windows 10. I think you can still get that on any machine that had Windows 8 until what? August of next year? I think it's August of next year, or of this year, excuse me. But by giving away Windows 10, they've got about a 50% conversion rate of people buying Office on subscription, and that's basically everything they were looking for anyway. They didn't think that they had a good opportunity or good chance to get a lot of people to upgrade without it. Now that they're upgrading, they're also going to be adding new services, new music services, new streaming video services, and I think we've just seen the beginning. But probably the strongest part of their business has to be the cloud. And probably we saw a little bit of that in Amazon. But it continues. Google, Microsoft right now tend to be the strongest people in the cloud services business other than Salesforce. So things continue to look fairly decent in this space. And they just can't do any wrong, really. And market, will they pull back with the general market? they can, but I don't see anything they're really doing wrong. Probably the weakest part were the sales of their phone business. I think they sold 12 million a year ago in this quarter. They sold 5 million Windows phones in this quarter. So that business kind of going away, although they're doing a great deal. And I don't think they're going to give it up, but I think they are going to change what they're doing in the phone business and kind of letting what out there now die a natural death and going to replace it. The gentleman that's responsible for the Surface laptops and the Surface Book is basically taking over the design of that whole phone business. And maybe he's going to come up with something new that's a little different than everything that's looked like an Apple iPhone forever. Hang on a second. I don't know why. I got a little bit of a tickle in my throat here. What else do we have going on here? MasterCard, of course, another one out with earnings a little bit better than than Visa. Much better looking candle, maybe because it was down here at the lows, and maybe it caught a few more people short. Better looking candle, but of course, 91.38 would take you to the 50% retracement on it. And we've got a call here, I think, coming in. We'll try to look at Clack. Not a big movement there. We've got Scott from Safety Harbor. He's not from Lutz. How you doing today, Scott?
Pretty good. I'd like to have you take a look at a couple things here. CX, CMEX, and Alcoa, AA.
Okay, CX?
CX and AA.
Cements or CSX?
CX is a cement company.
Okay. You've got confluence levels on the way up. Your first one is $5.35 to $5.42. Are you long this already?
No. I just got into it at the $3.95. I mean, the technicals, I didn't even look at it. It was just so cheap. I know I hate to use that word around there, but
cheap. If you love it at this price, you got to really love it at half the price.
Right.
$5.35 to $5.42 is about all you could expect out of this, which is not a bad trade, but
that'll make me a tremendous amount of money. I mean, $4 stock, I got a whole lot of it. It's what is it right now? $3.
You want to hang on through the break? We'll talk about Alcoa when we come back.
Okay.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And we're back. Scott, you still there?
Yes, sir.
Okay. Alcoa, Confluence is back up at $9.25, $9.26. I will give you this caveat, and that is you've got a congestion zone at 820. Do I think it even gets close to there? No. I've got a long on. I'm going to be out of it by Wednesday. I think this market holds up probably at least through there. After then, your risk is going to get much bigger.
I didn't check lately. What is it right now?
AA?
Yeah.
Get an exact quote for you. 725. It's up a quarter.
Right.
You know, if you could get 775, $8 out of it or something, you got 3 days. Say what?
Seems to be kind of stalled. What was the height today? Like 740?
I went off that page. Hang on a second. Uh, 728.
Yeah, so it seems to be kind of stalled right there for some reason, and that that lower sevens. But
you got everybody short. A lot of these people haven't covered. They're just going to probably the market will just hang up here normally for 2 or 3 days. You'll watch whoever's short probably go ahead and cover. Could you get $8 out of this?
Sign so many billion-dollar contracts though, and not even bump up. You know, they must have signed 10 contracts in the last month that are millions and billions of dollars. So,
yeah, normally what you get is you'll get today a lot of these stocks that are real heavily short. You will get these things. You'll get a day or two where they just kind of slowly go up, and then you'll get the big gap, right?
Right.
There won't be a lot of volume. You want to sell into that. So this gap's up 50.
725 right now. I mean, I got into 685 and just wait for it, then grab it when it comes back to 705. Do you think there's a chance of it coming back at this point?
I would probably sit on my hands till Wednesday.
Yeah.
If it gaps up to $8, I'd take the cash.
Oh yeah, absolutely. Oh, you know it. Yeah.
Well, I mean, you got a congestion zone starting at 807. So that's what I'd be hoping for.
Even with the shorts, I just think there's so much good news right now on Alcoa that.
I think it's a dog stock.
The word cheap. Yeah, I think there's going to be a point where it just doesn't retrace back into that sixes.
No, I think it's a horrible dog stock, but too many people are short it, and there's going to be a pop, and you'll want to get out on the pop. And that will be the shorts getting squeezed out. You'll get a pop, 50 cents probably in a stock like this. You won't see a lot of volume in it. They'll just run them out. It'll be thin. You may get an hour or two of that, and it will reverse, and that'll be it.
I day trade every day, and people always ask me this question, and I can never answer. They say, well, why is Cemex, the largest cement company in the world, $4, and Alcoa, the large, like $7, and Chipotle is $250 a share? I can't never answer. I don't have those answers.
It's just the total enterprise value, right? How many shares are there? What's the price?
I understand, but it's even more complex than that. Nowadays it's a public.
Well, it is. Sometimes. You pay for growth. If it's a big growth stock, you can pay higher multiples, right? I don't know if it's that tough. Hey, I got another phone call here. We're going to go on to it. Thanks for the call, Scott.
Thank you. Thank you.
We're going to go to Anthony in San Jose because he knew the way, and he wants to talk about a leveraged VIX product. How you doing, Anthony?
I'm doing good, David. How you doing today?
Fantastic.
Awesome. So I gave you a call several weeks back. We were talking about the UVXY, and you suggested that to hold tight till it got to about 26.
That's where I would be a buyer. That's where your back is against the wall. Huh?
Do you think it could still get to that range before this next down leg? Because it's holding pretty good.
Yeah, you get 3 more days like this. What do you think?
Yeah, that's true, too.
Yeah. So I always have to hope it comes back more. The problem is at $30, there's no risk reward that takes you from $30 down to 26, right? You're going to stop out. So you kind of have to pray that this thing comes back fairly decently. I'm hoping that this whole thing comes out. I could see us hold around 1950 and just see the whole thing bleed out for, 2 weeks. To me, I would love to see this thing come back because that means I might even have an opportunity to buy puts. So I've got to hope that the market goes a little higher and goes sideways a little longer and lets the VIX bleed off down, just if I have any hope of buying any puts that'll ever pay off. In 2000 and 2008, you had a pretty nice amount of time. In fact, I think it was May 5th of 2008 before we saw the retest of all the broker-dealers and the banks and Fannie Mae and Freddie Mac from the drive down that started pretty much now in 2008. I think it's more like 2000 than 2008. But both of those big move downs that, kind of started in January, kind of really started back up in March. I think we get that. Maybe it doesn't last till March this time. Every one of them is a little different, but I would hope. In fact, I know everybody's going to scream that day trades, but I would love to see this market just go sideways for a while and drive everybody nuts as long as that comes down to get an opportunity to get some huge asymmetrical bets on with, stuff like this and puts. So you just kind of have to. What's that?
It's a monster. I was just saying because the UVXY it's a great trading vehicle. I've caught it a few times, and that thing just roars.
If we can get 26 again, I think you might have 64 and 91 back in it yet again. So, yeah, I'm praying and hoping. But, I'm realistic, too. I may just not. But I have to, like I said, this thing moves so much that unless you catch it at the absolute top or you catch it at the absolute bottom, your risk reward is just horrible on it. So, we went with the SVXY when this thing peaked out and took most of the money out of it. Had a nice run with that. But you either have to wait until it's absolutely peaked out, and you have to wait until it's absolutely bottom. And if it's still moving around a lot, probably it's still going to move against you for a while. So you got to wait until
brokers, can you short this thing, or can you short the UVXY with some brokers, or is it only put options?
No, you could short it. I would say that there's a better vehicle, which is the SVXY.
The SVXY. I never.
That's what I did. Yeah, there's no. Okay. The puts melted as fast. You wouldn't have made any money. That's why I'm saying I'm hoping that I get back down to 16. maybe even less than 18 on the VIX, and maybe I get an opportunity to get back in there. I want to thank you for the call, Anthony. We're going to try to at least get 1 or 2 articles in from the Tech Insider Hour before the end of the show, and then I'll be back with Tom O'Brien in the bottom of the hour. Thanks again, Anthony.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
I had an email. Wanted to ask about the IBB and biotechs in general. Next week, of course, we're going to have a congressional hearing on it. There was one of the Republicans was out this morning talking about it. It looks like what he wants to do is drop the 4 or 6 month waiting period that it takes for generic drugs to get approved. And I think that's the one side. The other half is going to go after anybody that makes any money in biotech. So that's going to be one that if you think you're going to get a bounce, it's probably going to be after they get their moment of fame in front of Congress next week. In fact, I heard Tom O'Brien had bought some feathers and some tar for some unknown reason. It was going to go up there and join in the fun. What can I say? Back to the Tech Insider stuff. Anyway, don't expect the IBB to bounce until that's over. Just a few things I wanted to get to. Probably won't get into the next hour. It looks to a lot of people like these hackathons are going to become kind of the exact same thing that these game conventions are starting to be, where people literally play video games for profits and make a living off of it. If you don't know what a hackathon is, basically a bunch of people go in, they say, hey, we need products in this particular field. You go away for 2 days, they give you all the room that you need and internet connection, and you kind of come up with a product and you kick something out in 2 days, and the winner can make, the winning team can get 50, 100 grand. They split up, but most of the time there's 2 or 3 or 4 people in a team. So it depends on what you're doing. But there are now people making over $100,000 a year at these hackathons, and the prizes still go up. And what the people that are doing, that are funding these, they're getting ideas for new things to build. And within 2 days, they've got a prototype. And it's good for the programmers. A lot of these guys, work 4 weekends a year and walk away with 100 grand, so they're kind of happy. So kind of interesting thing happening out there. What else do we have? The FCC, kind of interesting. This will probably be the last one we get in this segment. The FCC and the current chairman, Wheeler, is going to get knee deep into the cable business again. What he wants to do is the set-top box, the thing that you have sitting on underneath your television, to communicate with the cable company to watch regular TV or HD TV, whatever you want. He wants to standardize those so companies like Amazon, Apple, Google can all make their own boxes, and you would be able to buy any of them from any of the companies. Now, this goes back to a 20-year-old law that Congress put in, probably not really ever thinking about this, but on the last and way out of the door, because he'll be over this year, Wheeler looks like he's going to force them to do it. He's got 3 votes in his pocket that will vote whichever way he wants to go. So that's pretty much it. So if you're a cable company, things probably not getting any better. And of course, there's a monstrous amount of money now coming in to Washington, D.C. from Silicon Valley. What did we say? Amazon was up 90% from a year ago in the money that they're spending in lobbying. Google is the biggest lobbying company in the United States. They spend more money than literally any other company. And you got to wonder just how much stuff comes up in front of them. Anyway, in the meantime, so when you can, not when you have to. Cover when you can, not when you have to. And we'll see you in the bottom half of the next hour with Tom O'Brien, or at 2 o'clock Monday. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.